Hi, my name is John Stevenson, the Guaranteed Retirement Guy. Today, we're going to be talking about how to purchase an annuity and the process that it involves. It's pretty easy, and when you got someone like me that's helping you do it, it makes it pretty easy. So I'm going to show you exactly how that works. So I'm going to share my screen because it makes sense that when you are looking to purchase an annuity, you probably want to look at all of the annuities available. And I'm going to be really quick about this section because I want to show you the process right after this. So if I were purchasing an annuity, and let's say I wanted an annuity for income, and you might be different, you might just want it for growth or market protection, and that's fine. You can buy a MYGA, you can buy a fixed index annuity that just provides that. And if you go to my website, johnstevenson.com, you will see the calculators that are available, and you can look at all of the annuity options for yourself. And then at that time, if you want to book a call, we can chat about different options. I can answer your questions and we'll go from there. So anyway, so if you look at this, this just kind of gives you an example. Let's say you got 500,000, you're in Colorado or whatever state, you're 65, maybe you're married, and if your spouse is 65, you want guaranteed joint income for both of you. All right, so $500,000, if you look at that, it'll give you joint income guaranteed if you waited 2 years of $42,705 for the rest of your life and your spouse's life. And that's with Corbridge. And you got Nationwide and National Western and American Equity and so on. There's lots of carriers out there. So I show everything that's available. Does not matter to me what you get, but I will show you and educate you on each one of these carriers and what I would recommend. Some of these pay us high commissions, some of these pay us low commissions, but it's important as a fiduciary to show you everything that's available so you can make the decision yourself. Okay, and I can help you set it up. And so I'm going to show you how to do that. Now, if you want to look at, you could change things around. I mean, you might go to my calculators and say, well, I'm going to take my income at 70. Okay, if you wait longer, then obviously it's going to be higher income, 55,000. But maybe you're not 65, maybe you're 55, or maybe you're 60 and you want to take income now, or you want to wait till 65. There's all these different variations. And my calculators, they plug directly into CanX and directly into Annuity Rate Watch, and it gives you all of the data from all the carriers right there. And then you can book a call at that point if you'd like to chat more. So, and then if you want to look at, MYGAs, and again, the process to purchase these annuities is to look at the top ones first, and then we'll submit the application. So if you go in here, you can see all the top MYGAs. These are multi-year guaranteed annuity contracts. You can see all the rates they're paying. These are the top 3 out of each of these terms. So you can see right now the 10 years paying, the top one is like 5.65. And this just shows a guaranteed value of 1.7 million if you were to put $1 million in. Okay. So anyways, just depends on what you're looking for. So the process, here's how the process goes. So you pick your annuity. Okay. That's the first part. Okay. You pick the annuity, and then what we do is we submit an application. Okay. So what I do is I go to Firelight. Firelight gives me broker access to all the carriers. Okay, I can go in here and I can submit an application. Okay, I could choose whatever state it is. Maybe it's Idaho. Okay, and then maybe the carrier is Clear Spring. And then maybe the annuity, maybe I decide to get the multi-year. Okay, it'll go right through here. Oops, got that one. All right, so there you go. So it pulls it up. Residence state, it'll ask that. Some of them will allow you to buy out of state, just depends. But usually it's the same state. All right. So if I go that, then it'll pull up all of the paperwork. See that? Pulls up everything. And usually what happens is during these Zoom meetings is we'll look at the application together. It's all done electronically, and you'll be able to see all the questions. So I'll be asking you questions. It'll ask for your name, your social security number, if you got a spouse, it'll ask for that. Ask, what your primary beneficiary is. We'll put in contingent beneficiaries. You don't have to, but we can. And then they're going to ask questions like, what's your income? What's your total household income? What's your total expenses? What's your debt? Okay. What's your net worth? Okay. How much are you putting into this annuity? Maybe you're putting $500,000 in. Is that all your money? They're probably going to be like, okay, that's not good. We don't want you to put all of your money into an annuity contract. So most people, they'd like to keep it between 30 and 50% of their total net worth if they're going to put money in annuities. Some people do a lot more than that, but usually rule of thumb, they don't want you to put any more than 70 or 80% max. So they want to make sure that you have savings outside of these contracts. So if you were to have an emergency, you'll dive into those savings instead of the annuity contracts because they have surrender charges if you were to surrender them. Okay. They do usually have free withdrawal amounts, up to 10% usually, just depending on the contract. So keep that in mind as well. So what we do is we'll spend 45 minutes and we'll fill this out. Okay. Income, expenses, debt, income, what do you have in your 401ks, your IRAs? What's your cash look like? Okay. Stock, everything. Okay. They're going to ask those questions. And if it's an income product, they'll ask you when you think you might take income. If it's a SPIA or a DIA, you have to put in a date. It's an actual date that you have to put in, and that's irrevocable. Okay. That's different. For a MYGA, it's very plain and simple. You're putting money in, you're getting a fixed rate of return. Okay. And it compounds over however many years you want it to compound. Okay. For the income product, they're just going to give you, they want to know a little bit more about you. They want to know when you think you might take income. And if it's an income rider, you don't have to choose at that time when you're going to take it. Okay. You can take it in 5 years. You might change your mind and say, I'm going to take it in 4 years or 3 years, or maybe I'll wait 10 years. Okay. That's the nice thing with an income rider. It gives you guaranteed growth for income, and it gives you a lot of income guaranteed for either yourself or if it's joint for you and your spouse. So it's very, very flexible. And if you want to surrender the contract later, you can get your money back. Of course, if you do it during the surrender charge period, you will have to pay surrender charges. So that's why it's always a good idea to do good, sound planning so that the chances of you ever doing that is very, very low. Anyways, after we submit the contract, okay, once the contract is submitted, it takes around 5 to 7 business days for the company to approve it. That's not always the case. I had one approved today and we submitted it yesterday. So sometimes they get approved really, really quick, but that's just the average. So once it gets approved, if it's a 401k or any employer-sponsored plan, TSP account, okay, 403b, what happens is we will actually initiate the transfer on that end, okay, from the 401k provider, or from the TSP account, or from the 403b, wherever it is, we will initiate the transfer there. It'll be a 1035 from there to the new account over with the carrier, which if it's a tax-deferred account, it'll go to an IRA. Okay. If it's a Roth account, it'll go to a Roth. If it's just cash or stock, then it's a non-qualified account. And it's just non-qualified means it's just not the qualified accounts that the IRS says is qualified, like IRAs and 401ks and Roth accounts and so on. Okay. So with those, they're just going to give you wiring instructions. And then you'll just wire the money straight over to your account. Once the money gets there, whether it's a custodian to custodian transfer or whether it is a wire, it usually will issue within 2 business days. Okay, so once the money hits the account, it'll issue and you can log in, you can see your money, you can see your growth. If it's a MYGA, you'll see the interest credits coming in day one. I mean, they'll usually credit those every single day, which is kind of nice. But with physical contracts, they will mail those to me and then I will sign off on them and I will mail them straight to you. Most of the time, they will send a physical contract on top of the online account. So, and then we'll just send them to you. You'll be able to sign off on it and you'll have that in your possession. Okay. And that's it. It's really a pretty easy process as long as you've got someone who does it on a regular basis, take care of it for you. So we'll do it together. Okay. We'll look at the annuity contracts. We'll look at all of the annuities available, whether you're looking for income, whether you're looking for, immediate or deferred, or you're looking for MYGA contracts. I'll show you everything that's available. Okay. You can go to my website, johnstevenson.com, and you'll be able to play with the calculators yourself and you'll see for yourself. And if you find something that you like and you're like, hey, I'd like to talk more, then book a call. Okay. You'll see a link on my website and you'll see a link below this video as well. So if you want to book a call, we can talk about all things annuities. And of course, if you want to submit an application, I'll take care of that for you and with you on another Zoom call. And then the process usually will take about 3 weeks on average to, from submitting the application to actually issuing the contract, just depending on how long it takes for the funds to get there. So that's really how it works. And then it starts earning, whether it be an index or whether it be a MYGA or whether it be an income rider, you're going to have, if there's a bonus, that'll be applied. And then if there's a roll-up rate, that gets applied on the next anniversary until you start taking income. So lots of things to think about, but it's a pretty straightforward process. I do take care of it for you and with you. I just want you to kind of know how it all works. So anyways, hope that helps. If it does, please please share, please comment below if you got questions. And if you want to book a call, go ahead and do so. So thanks again for watching, and we'll see you next time.